Hey guys, it's Chris Wong. I'm filming this video as of April 22nd, 2025, and I'd like to talk about why I prefer income style investing over growth style investing and some truths about income investing over growth style. So as a disclaimer, I'm not a financial advisor. I'm just a guy interested in building a portfolio. So I talked to a few people about investing, and we all had different styles of investing. And what I found out from people who prefer growth investing is that they like the total return better than income style investing, and they like the tax benefits of growth style investing. So I'm not a tax expert. I'm just a guy who likes to invest. And based on the conversation I had with them, they told me that when they invest for growth, there's no tax to pay until you sell. And the long-term goal of growth investing is that whatever you buy, the long-term plan, it's going to grow just by holding on to them. And through the ups and downs in the market, the long-term trend is the investment is going to be bigger when you actually finally decide to sell it. So for income investing, the total return when the market is up is not going to be as high as growth style investing. And when the market is down, both types of investing styles, they both go down. So when the income ETFs, when the markets go down, the fund goes down, even the same with the growth style ETFs as well. So the investments I have are Canadian listed and US listed, and most of them are based on the indexes like the S&P 500, the NASDAQ 100, Russell 2000, and even the Canadian TSX 60. So I have investments on my Wealthsimple account, TFSA, like HYLD by Hamilton ETF. I have Global X USCL, QQCL, and I also have the Harvest High Income Share, HHIS. All these are based on indexes. HHIS is a bit more concentrated on the top holdings and has MicroStrategy and Palantir as well. And for US listed ETFs, I have ETFs like YMAX, QDTE, RDTE, XDTE, even Defiance QQQY as well. They pay dividends every single week, and there's also withholding tax taken off if it's in my TFSA or my margin account. But in the RSP, they are actually exempt from the withholding tax. So whether the market is up or whether the market is down, all these income style ETFs that I picked, they always pay a dividend every single month or every single week. And no dividend has ever been missed. Whether the market is up or whether the market is down, I still get paid dividends every single month or every single week. And with these ETFs that I pick, no dividend has ever been missed. So when the dividend gets paid out, I get to choose whether I want to use it for expenses or just take it out and keep it as cash for a bit, or just reinvest, buy the same shares I have, or look into other ETFs. With the growth style type investing, I know many people prefer this style, and you can still get rich this way. I personally prefer the income style investing, and after experiencing using income style, I actually don't like the growth style type investment strategy. With the growth style investment type strategy, for me, I'll have to actually sell the investments if I want to use the cash. And that's if I'm not using margin. And if the market's down, then I'm not feeling like I'm getting the benefits of growth style investing if I need the cash when the market's down. But if the market's up, I know it can be beneficial to sell if I need the cash or if I want to try to profit from selling. The dividends in most growth style ETFs, if they do pay dividends, they pay quarterly, and it's less than 3% dividend yield for most of them. So in order to live off the dividends off the growth style type ETFs, you need a lot more capital compared to the high yield investments that I use. Some of the funds out there like VOO by Vanguard, it is a great ETF that covers the S&P 500. And I know on Questrade it had 20% margin requirement. VOO is a great ETF for growth, and it does pay dividends on a quarterly basis. I tried investing in VOO on my margin account, and I tried the 20% margin requirement, but I made a mistake myself of using too much margin, and it gave me a lot more buying power, but I also knew it came at a cost later. So when the share price went down, I lost a lot of buying power. And if I was in margin call and I only invest in VOO, then I'll have to sell 5 times the investment to settle the margin call. And one of the downsides of investing in VOO for myself is that my income from my job, it will take a while for me to save money to buy shares of VOO. So I actually prefer the income style type of investing, and I would prefer to prioritize income shares first, because if I prioritize income shares first, then it's easier for me to generate dividends every single week or every single month, and then I can actually be more active on my brokerage accounts and buy more shares of other ETFs. And in the future, when my dividends get bigger, if I feel like I want to buy VOO, it's a lot easier for me to buy VOO in the future when my dividends are big enough to at least buy one share, versus, let's say now, if I want to use my work income to buy shares of VOO, I have to work for at least a couple months or even 3 months at times to save enough money to buy one share of VOO, and that's after converting my income from Canadian to USD. That's the assumption if I want to save money to buy one whole share. But then I haven't tried fractional shares yet, and I've heard some people have bought fractional shares of VOO or other ETFs. Me personally, I prefer to buy whole shares, and at least on Wealthsimple, last time I checked fractional and whole share differences, it seems that buying shares in whole numbers, they process much faster. I actually just like to get it over with and make sure it's complete. I haven't tried buying fractional shares in a long time, so I don't know if the program has changed for buying fractional shares. So with the Canadian ETFs I have, all the ones I have so far, the dividends have been the same every single month. And if the dividends went down a little bit when the market was down, it actually took a while for the ETF providers to lower the dividend. And even when the dividend was lowered, it wasn't even lowered that much. It was only like 2 or 3 cents at most, if it did happen, for even like HYLD. I remember a year ago or 2 years ago when HYLD was 14 cents, and then it had to lower down to 12 cents. So it didn't really make much difference in my monthly income when they have to lower from 14 cents to 12 cents. So one of the benefits I find using the income style type investing is I still use the same approach of trying to live on my work income. I live on less than my work income. So for income style type investing, I live on less than my dividends. And I still make it a goal to save my money and to reinvest and buy more shares of the same funds I have or different types of ETFs. If my primary investments happen to be growth, I can't picture myself trying to live on less than my total return of the portfolio if I want to fund my lifestyle. I wouldn't know what to do in order to live my lifestyle if I want to retire early just by focusing on the growth ETFs. I may consider getting growth style type ETFs in the future, but right now my primary goal is to build up my income style ETFs in order to fund my lifestyle. Because in the future, if I want to buy a growth style ETF, I'd rather have dividends from my income style type ETFs to buy shares of the growth style ETFs. I think it's a lot less stressful for me to do that in the future than trying to use my work income to try to buy growth style type ETFs. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.